Hi, my name is Erica Endyke of 20 West Legal. I'm an attorney in Sudbury, Massachusetts, and we're going to talk about your business, starting your own business, and some considerations. So first, when you do go into business on your own, there's two lingering concepts in the background. Those are tax and liability. So first, taking a sole proprietorship, it is the simplest form to operate a business. You just go out and do your thing. And it is by default, whether you know it or not, what you're operating as if you elect to do nothing else. So there's no fancy paperwork or filing requirements. Super simple, you just go out there and get to work. Now from a tax perspective, you will file all of your profit, that is, all of your income minus your expenses and deductions onto your own personal tax return. You'll file a Schedule C, attach that to your regular 1040, and it will note your profit, and you'll pay the tax that you would on your own personal level or tax bracket. However, in addition, you're going to pay a 15.3% self-employment tax. Broken down, those are your Medicare and Social Security taxes. When you used to work for an employer, your employer would pay half. That's why you would see the line item deductions for these on your pay stub. When you go it alone, you pay them alone. So you're subject to the 15.3% self-employment tax on top of the tax that you pay at your personal income level that you normally report. So there can be some significant tax liabilities there. Moving on to the liability side of things, not tax liability, just legal liability. It's kind of simple because there's absolutely no legal protection. When you are operating as a sole proprietor, there is no veil around you, which other business entities have, meaning no protection so that if you cause harm or damage to a client, a customer, a patient, what have you, then your personal assets could be personally liable, not personally liable, just liable or personally liable if you get sued. You know what I mean? And the same is true if you're out doing some errands as a person and having to do nothing with your business, but you do get into a car accident or cause harm, your business assets could also be subject to creditor attachment. So pros and cons of a sole proprietorship. Pros, super easy to set up. There's no formal paperwork to continue to file. It's low maintenance and you just do your thing. The cons are you could be subject to high taxes and there's no liability protection, so your personal assets are subject in any lawsuit against you. Next, after a sole proprietorship, is the most common form of business entities, and that is the LLC. From a tax perspective, there's a couple options with the LLC. First, you can elect to be treated similar to the sole proprietorship, where you will just report all of your profit on your personal income tax return, and you'll pay the self-employment taxes as well as the state and federal income taxes. We call these entities pass-through entities because basically all of your income is just passing through to you personally. The next option for an LLC is an S-Corp. So with an S-Corp, what you do is you would pay yourself a reasonable salary, and the key here is reasonable. That's why I say it like reasonable. So what someone in your industry is averaging, what you would pay another to sit in your seat and do your work. And then with the remaining profits, you issue yourself a distribution. What's awesome here is that only the salary is subject to the self-employment taxes. Now, setting up the S-Corp is a bit more complicated than the sole proprietorship. It is just a tax election, but there's some legwork behind it. You must file before March 15th. And you should consult with your CPA before moving forward with this. Okay, from a liability standpoint of view, liability, limited liability corporation, this is why people enter into these entities. enter into these entities. A lot of E's there. So you are creating, by creating an LLC, a veil or shield around your personal assets so that if you do anything harmful to another while you're at work, your personal assets are safeguarded. Now, you do have to go through the formalities of setting up the LLC and following the operating agreement, which is a subject for another video, or you're going to risk piercing the corporate veil. I don't know if that's legal jargon or if you've heard that term before, but it's basically someone saying, hey, he's calling himself an LLC, but it's really just a fancy moniker that he chose because there's no differentiation between himself and his business. He's commingled funds. There's never been any separate portrayal of how he's acting. There's no members. There's no voting. I could go on, but I won't because I don't want to confuse the video even more. So breaking it down, pros and cons. Pros of an LLC are that it is fairly simple to set up. There's huge liability protection, and there are certain tax elections which can help you save taxes. The cons are you do have to go through the legwork of completing all the steps to set it up, not just filing with the Secretary of State. And you have to follow your operating agreement. Also, if you do choose to move forward with an S-Corp election, you will be required to take some extra steps, which always costs more money and may not be reasonable at the beginning of your business. So I hope that this video has helped explain some key differences in sole proprietorship and LLCs. And if it has, or even if it hasn't, just because you like my video, could you give me a thumbs up?